Hi, my name is Nurul Aisyah binti Karol Anwar. I am from JBA 2422A. So today, I would like to discuss about money market and foreign exchange market. So let's get started now. Money market basically refers to a section of the financial market where financial instruments with high liquidity and short-term maturities are traded. Money market has become a component of the financial market for buying and selling of securities of short-term maturities of 1 year or less, such as treasury bills and commercial papers. Next is foreign exchange market. Forex is the marketplace where various national currencies are traded. The forex market is the largest, most liquid market in the world with trillions of dollars changing hands every day. There is no centralized location rather than forex market is an electronic network of banks, brokers, institutions and individual traders. Now, I want to explain about the characteristic of money market. The first one is submarket. A developed money market has the most developed and sensitive submarkets. The money market is a group of various submarkets, each dealing in loans of various maturities. There will be markets for call loans, the collateral loans, acceptances, foreign exchange, bills of exchange, and commercial and treasury bills. Next is integrated interest rate structure. The interest rate which prevail in different submarkets are integrated with each other. To clarify it, a change in the bank rate results in equal proportionate change in the interest rate which exists in the case of different submarkets. It is due to this structure of interest rate that the central bank can exercise control on the functioning of the money market. And the last one is availability of ample resources. A developed money market has easy access to financial resources from both within and outside the country. The London money market attracts adequate funds from both sources, internal and external. Next is the characteristic of foreign exchange market. The first one is dollar is extensively traded currency. The USD, which is paired with almost every country's currency and listed on the forex, is the most widely traded currency in the world. Next is international network of dealers. The foreign exchange market established a medium among the dealers and also with the customers. There are dealers institutions located globally to carry out the exchange trading activities. And last one is high liquidity. The currency is considered to be the most widely traded financial instrument across the globe, making the forex market highly liquid. Next, I want to explain about the roles of money market. The first one is financing trade. Money market plays a crucial role in financing both internal as well as international trade. Commercial finance is made available to the traders through bills of exchange, which are discounted by the bill market. Next, profitable investment. Enable the commercial banks to use their assets reserved in profitable investment bank want to earn income from its reserve as well as maintain liquidity to meet the uncertain cash demand of the depositors. Their money assets, for example like short-term bills of exchange, which highly liquid and can be easily converted into cash. Last one is self-sufficiency of commercial banks. In the situation of emergency, when the commercial banks have security of funds, they need not approach the central bank and borrow at a higher interest rate. On the other hand, they can meet their requirement by recalling their old short-run loans from the money market. To share you about the roles of foreign exchange market. The first one is transfer function. The basic function of the foreign exchange market is to transfer purchasing power between the countries to facilitate the conversion of one currency into another. The transfer function is performed through the credit instrument like foreign bill of exchange, bank draft, and telephonic transfer. Next, credit function. Another function of foreign exchange market is to provide credit, both national and international, to promote foreign trade. Bills of exchange used in the international payment normally have a maturity period of 3 months. Last one is hedging function. In a situation of exchange risk, the foreign exchange market performs the hedging function. Hedging is the act of equating one's asset and liabilities in foreign currency to avoid the risk resulting from future changes in the value of foreign currency. The next section, I want to share with you the participant of money market. The first one is private sector companies. Private sector companies issue commercial papers and corporate debentures. Commercial papers are short-term, negotiable, discounted debt instruments. They are issued in the form of unsecured promissory notes. They are issued when corporation wants to raise their short-term capital directly from the market instead of borrowing from banks. Next, mutual funds. Mutual funds invest their funds in money market and debt instruments. The proportion of the funds which they can invest in the one instrument vary according to the approved investment pattern declared in each SIM. Non-banking finance company is invest their funds in debt instrument to fulfill certain regulatory mandates as well as to park their surplus funds. Non-banking finance company are required to invest 15% of their net worth in bonds which fulfill the SLR requirement. Participant of foreign exchange market. First, central bank. The central bank regulates the exchange rates of the currency of their respective country to ensure fluctuation within the desired limit and keep control over the money supply in the market. Next, commercial banks. The commercial banks are the medium of forex transaction, facilitating international trading and exchange to its customer along with other forex functions like making foreign investment. Last one is brokers. They are considered to be financial experts who act as an intermediary between the dealers and the investor by providing the best quotation. Here we have two development of money market. The first one is in 1995 issuance of Malaysian Treasury bills. The government started issuing of Malaysian Treasury bills in 1955 until 1973 based on demand. The discount rate was predetermined by the government based on the central bank recommendation. Next is on June 1987, introduction of Kuala Lumpur Interbank Offer Rate served as a reference rate that can be used for the pricing of loans and other products and serve as an indicator of the condition in the interbank money market. Next is development of foreign exchange market. The first one is in March 1968, international gold and exchange crisis. The crisis led to the closure of the London gold and foreign exchange market on 15 March 1968 and the suspension of foreign exchange dealing from 15 to 17 March 1968. Next is on August 1975, change of name of the Malaysian currency. Following the Gazette of Malaysian Currency Ringgit Act 1975 on 28 August 1975, the name of the unit of currency in Malaysia was legally changed to ringgit and cent, replacing Malaysian dollars and cents. Next is legislation of money market. In 2014, the SEC adopted new rules to permit money market funds direct at retail investors and funds. The invest solely in government securities to continue to offer a stable NAV. Institutional prime money market funds are required to maintain a floating NAV. Next, for the legislation of foreign exchange market is the National Futures Association. All operating forex workers in the United States must become members of the National Futures Association in order to work on behalf of American retail traders. This self-regulatory body works hard to protect the integrity of the forex market and implements new forex regulation where necessary. Is contribution money market to economics. The money market plays a significant role in the economy. It serves as a market for indulging in transaction for a short period. So we have the important function of money market. The first one is money market promotes the growth and development of the economy. Money market provides assistance to industry and trade. It also offers non-inflationary finance sources to the government. Next is contribution of foreign exchange market to the economy. Foreign exchange identifies the process of converting domestic currency into international banknotes at particular exchange rate. Foreign exchange rates carry important political implications. Citizens may point to unfavorable exchange rates and trade imbalance as sign that politicians currently in office are mismanaging the economy. The orderly dissemination of exchange rates through organized currency market leads to increased globalization. Globalization refers to the integration of separate nations, regions, and cultures within the world economy. Well, that's all from me. Thank you for listening to my video and I hope you will enjoy it. Thank you. Bye.